I'd just go into panic and hope. Like, I'd be down $400, $300, $400, $500, and I'd $600, $700, $1,000, and I'd just go into panic. But now it's almost like a game of like, how good can I be at cutting losses? How disciplined can I be? Now it's like, if I'm down $30, $40, $50, $60, I'm like fingers on cover. And I'm like, if I lose more than 200, I'm like pissed.
You're listening to the Steady Trade Podcast, a podcast that inspires traders to make meaningful strides and pursue their passions. Your hosts are Tim Bohen, the lead trainer at StocksToTrade Pro, Kim Ann Curtin, the Wall Street coach, and Stephen Johnson, the up-and-coming trader who's always willing to learn. Together, we'll sit down with experts to talk about their process, the lessons they've learned, and discuss how all traders can level up their trading careers. Today, you're listening to episode 123 of the Steady Trade Podcast. In this impressive episode, Stephen explains how he grew his account 500% in only a couple of weeks, and the new mindset he has, which made it all possible. Stephen, take it away.
Welcome to the Steady Trade Podcast. We look at the soup du jour, SES, that set the stock market on fire. And we look at how through conscious and disciplined trading, there's money to be made on the long and the short side.
As I mentioned in the introduction, we're reviewing a trade as well as the trade performance of our number one wacky co-host, Stephen Johnson. So, we were kind of doing a little bit of banter before the episode, and it's impressive what Stephen has done. And as much as I love to give him a hard time, I mean, turning, I'll let him give the hard stats. I just kind of heard the rough summary, but I think he's recently turned a $700 account into a $4,000 account into a matter of weeks. Now, many of you may be jaded. Many of you may be like, oh, $3,300 in profits, big whoop. I spent $3,300, on my mortgage payment last month or whatever. I mean, whatever that money is. But my point isn't that, well, to me, $3,000 is still a lot of money. I wouldn't throw it away on anything. But my point is, what we're going to talk about, the reason for the topic, is how difficult it is to take that $700 account and turn it into a $3,000 account. I mean, in internet lore, on YouTube, on Twitter, you will see people talk about this all the time, about doing that, but seldom have I seen it proven, and Stephen is proof of that. Now, one thing I do want to point out, he's got a lot of experience. I mean, if you're a longtime listener of the podcast, he was trading for a year before he joined the podcast almost 2 years ago, but doesn't make it any easier. If anything, I mean, I've talked about this on the podcast. I've been doing this for 13 years. If you gave me a $700 account and told me you got a couple weeks to turn this into $4,000, I would be very, very concerned about being able to accomplish that. So, as always, welcoming back Kim and Kim Ann Curtin, our new and much welcomed co-host. Well, I guess we're all co-hosts at this point, and then Stephen as well. So, welcome back, guys.
Yeah,
nice to be here. I'm excited to learn about what you did, Stephen, because what I see on the screen is really impressive. So you have to explain it.
No, I mean, for me, it was over 6 weeks. I turned it was crazy. I turned $600 into $3,500, and then I left it, in Thailand on one day, and I forgot I was in a position, and I blew it up. So then I thought, if I can do it twice, then I'll really know I can trade. And then I turned 680 into 4,500 now, 4.5K. So then I'm like, all right, I've grown my account like 500% now in 6 weeks. Like I know I can do it. And if you can do it with small amounts of money, you can do it with larger amounts of money.
How long did it the previous time before your adventure to Thailand?
Same 5 weeks.
Roughly the same time. Interesting that it took. And I tell you what, this is one thing. Very different markets as well. I mean, the last time was probably like what, August, September, or when did you do it last time?
Yeah, I think I did it. I did it like May to July, or
okay,
May to July, and then I blew up, and then I went August to October or whatever. But no, I mean, it's you've just got to take the opportunities when they come. Like I sat for 3 weeks not making any money, but like nothing would come on for 2 weeks. Be up 200, down 200, up 200, down 200. Then Vive came and I made like $2,000 on Vive, and then I was stuck for a while. And then SES came and I made like $2,000 on SES. So like there's your $4,000 straight away. Do you know what I mean? But you've just got to wait and know the right opportunities.
And obviously, if you're on YouTube, if you're not, if you're on iTunes, you can always jump over to the YouTube. But what we're going to be talking about is SES, and we're recording on October 16th, 2019. This is, this was kind of the bringer back in Stephen-like language of the low float mania. Again, you can bring up this chart starting on the 11th, which would have been last Friday. The stock started out gapping up, dang near 100%.
Yeah, it was up. I remember I shorted it on the first green day, as I typically would, with no idea. Like I shorted it at 4 up from 2. I shorted it like maybe in the 380s or something like that. No idea I was going to go to 24, 25. No idea.
But that's the biggest thing is, and people will, they'll if you're watching on YouTube, they see this chart and they hear Stephen say he shorted it, at 3 or whatever, and they're like, oh, Tim's going to lose his mind. No, I'm not going to lose my mind, because you know what Stephen did? He cut the loss. I mean, now old Stephen, 6 months ago, a year ago, Stephen would have rode it all the way up, ran his account down to 1 penny, and then flew to Thailand again. But new Stephen shorts early, but knows what could potentially happen, so he cuts that loss.
Oh, no, I cut so many losses on the way up. I cut so many losses on the way up. And a lot of them, I cut the losses and went long, because I knew that there's a lot of old Stephens out there who are not me, but they're very much like me. It's like I'm the real Stephen, the real Stephen, and everybody else is just imitating. It's like I'm Slim Shady, but I'm Stephen. I'm the real Stephen. There's a lot of
so
Stephens out there.
What's different?
Thank you.
What's different?
It's something. I've got a little Sudanese guy in advertising, a copywriter, and everything just clicked from a while ago, and it's I've seen the same situation so many times, and I've seen shorts get stuck so many times. I've seen longs get stuck. I've seen shorts get squeezed. I've seen longs jump in on a quick volume spike. I've seen the same thing happen so many times that I'm more prepared. I'm more prepared for what's going to happen. And then when you're more prepared, you can seize the moment more. Mm-hmm. I've just seen it all before. And Tim Bohen said years ago to his, I was like, what patterns do you play? What do you do here? What do you do there? And he said, I just trade price action. And I'm like, that's a really weird answer. I don't get it. But from what I understand from it now is, like, I kind of just trade price action. I just think, have I seen this before? What's the likelihood of this happening? What's the likelihood of that happening? Based on 3 years of watching. And I'm like, it's more likely that this is going to happen. I better get out. It's more likely this is going to happen. I better add size because it's going to go my way.
So Kim, I would
did this in 6 weeks. He did this in 6 weeks, and then before the vacation in Thailand, you did that in 6 weeks. Have you ever done it before 6 weeks?
Nah.
And then 6 weeks. So twice in a row.
Yeah, I've never come even close. I was always up and down. I was always like making some, losing some, making some, losing some, and then before that I was losing. But then all of a sudden in the last maybe 4 or 5 months, I've just constantly known how to cut the losses and where. And I'll make the odd mistake. Like I cut a $700 loss a couple of weeks ago, and it was just sad. Like I was like, made a mistake, lost $700. But I've never lost more than 700 in 3 or 4 months. You just know where the losses are coming, and you know where the gains are coming, and you know what's going to work, and you know what's not going to work. And if you're wrong, you cut it tight.
So Kim, I would like your input on this. So I'm just a caveman, but so the analogy I always use is at some point, and Steve and I have talked about this, and I get asked a lot by listeners, how do I quit taking the big loss? And the answer I give, again, is very crude, I guess you would say. But I tell them, I'm like, listen, at some point, you will get sick of this. You will get sick of burning your hand on the stove. You will get sick of ruining your day, your week, your month, hating life. And when that time comes and that loss is growing, it will click to you that I am not going to do that again. So I use the burning the hand on the stove analogy. What is the more educated, well thought? Well, I mean, what is happening in Stephen's brain these last few months? Talk about a Pandora's box. This will be what is happening in Stephen's brain. This is like a 48-hour episode, but in this particular instance, what is happening in Stephen's brain in relation that he's, what's going on? Why is he able to do this now 3 years later?
I do think the hand on the stove is a great metaphor, because it's ultimately what I think this is about is being with what's so. Everything he just said about, I am seeing now all the permutations of how it could go, and I recognize them. That's what I'm hearing him say. So what it tells me is, first of all, the experience is there, right? You can't kind of be with reality until you understand what reality is. And you can't be with the truth until you with the truth. So it sounds like he, for whatever reason, and it has no doubt probably to do with just his experience, he just keeps coming back. He keeps playing. He keeps coming back to the same thing regardless of what happens. And after a while, you just start to see what is so, and you're not in resistance to it or think it's an anomaly. Now you know, oh, this is what happens sometimes, and I'm going to go left instead of right, finally.
So I got a question for you, Stephen, but I want to follow up with you, Kim. So do you think, and obviously I know it's just your opinion, but do you think that it's just, he had to reach that point where just psychologically he's like, I've been through this enough, and it's just like that breaking point? Do you think that, and follow up is, I think, but what do you think? Is that point just different for everybody? Maybe somebody does in a month, maybe someone does in a year, maybe someone takes 10 years.
Yeah, I think, I go back to one of the episodes we recorded, Stephen, when, we were talking about kind of the bumping into this. And one of the things you said was about being present, like you realized you really weren't present to your trades. And I felt like that aha moment for you, seeing that, has kind of made you now be maybe more present to your trades. And if you are really present to the trades, then of course you would see things maybe that maybe were showing up before, but for whatever reason, they just weren't as noticeable. And now they're noticeable. I think that might be part of it.
No, for sure. For sure. We had a call and we talked about awareness and thought process before you take a trade in question, and the reason and the rationale when you take a trade. And then it was then that the 700 account turned into 3,500. And I was like, wow, I had this chat with Kim, and then it's turned around. And then of course, every now and then you slip up. I made the mistake of going out and leaving, not realizing the trade was on. But then I had the confidence to think I can do this, and I know the process and how it works. And now I don't really go through the self-reflection of why am I taking this trade. I'm more like, because I used to be like, why am I taking this trade? What's my mindset? What's my psychology? I don't do that as much anymore, but that was the turning point for me. Now it's more it's more like, this is a low float with high volume. I need to be careful. So I need to be like half size. So if it does go wrong, I can take full size. Then if it goes wrong again, I can just cover. So I'm much more cautious. I'm much more like always plan for the worst case scenario. And if that means that you take less profits, it doesn't matter as long as you take profits.
I think it's so important what you just said about, I think that's, kind of what I would say is consciousness, right? In the world I live in, right? You notice that, wow, maybe I'm not really present to my trading. And so you started the exercise of, what is the motive behind my trade? And what happens is when you do that for a few weeks, for months, whatever the time span is, you get to the place where you evolve past that. You don't have to check in anymore because you now know that your trading is not motivated by making money back or because you're bored or whatever the reasons are for anybody. It's like now you've gotten to the place where your trading is informed by just the consciousness to trading. And that's the only motive here. And even when I'm hearing about you coming back from Thailand, you had this confidence, you're saying. You were like, of course I can do this again. And that, because you weren't taking it personally now losing that, like, okay, you forgot to shut it off. That's not the same thing as a reflection of your abilities. It's a totally different thing. So you didn't take it personally. And then you went right back in, determined to like create it again. And you did because you were in a whole nother space, less drag.
But isn't that fascinating? Because beforehand it was like, I want to take this trade to win this, or I want to take this trade to feel good. But the second time after I blew up in Thailand, I thought that's not fair. Like I thought life has dealt me a bad hand there, blowing up in Thailand with Roku. And I thought, I know how to do this, and I'm going to prove I can do it again. So I followed every step, and the whole plan was just make sure you make money to prove that you can get back to 3.5K. Just do it all. So that was my motivation behind every trade. Cut this, take this, follow these rules. And it's not about feeling good, it's about the end objective.
I don't want to say unemotional, but I kind of do, because it's kind of like you were less, it was less personal. You had a goal. You didn't allow, that internal kind of gremlin talk to distract you. Like you were just really clean in your energy of motive. If you
that was my point. What the visual I had, and this shows me as a child of like the 70s or probably in the 80s, is I remember like this cartoon where hopefully I can find it. And maybe I'm imagining this. Maybe maybe this is false memory. But what I felt like with Stephen was like this when like, and let me know if you agree, Stephen. When you're in those bad trades, did you just like detach and like you mentally just go somewhere else, and now you're staying here? Or am I like imagining things?
No, it's so weird and hard to describe, and I feel so blessed that I can tell people it because it's so fresh. So it's such good advice for other people who are going through the same. But it's like, it's like I'd just go into panic and hope. Like I'd be down $400, $300, $400, $500, and I'd $600, $700, $1,000, and I just go into panic. But now it's almost like a game of like, how good can I be at cutting losses? How disciplined can I be? And like, now it's like, if I'm down $30, $40, $50, $60, I'm like fingers on cover. And I'm like, if I lose more than 200, I'm like pissed. Do you know what I mean? Like my fingers, like how tight can I cut losses correctly? And every now and then I'll cut a loss where I would have won. But that's okay. It's more of a game of how tight can I consistently cut losses and be right.
I know the reference. I know the reference. This is do you guys, and I doubt Stephen will remember, but and it was driving me nuts. Do you remember the drinking scene in Dumbo?
No.
The classic Dumbo cartoon. When Dumbo gets drunk.
No,
the baby elephant.
Dumbo,
this tells you how, whenever people are like, why are like, like old people, if you're a millennial and you're like, why are so old people so weird? Okay. There was a scene in the original Dumbo where like he goes drinking and the pink elephants, the dancing pink elephants were what I was thinking.
I remember the
Human's consciousness leaving when he was in a bad trade. So that may be a reach. I'm not saying this analogy works, but it was bugging the heck out of me. I saw this drinking in a cartoon, and it was Dumbo from like whatever 1968 or whatever. So
it's a great, because if you're not grounded, I mean, what it sounds like, Stephen, is what I hear when you describe even the sharpness of you cutting your losses. It just sounds like you're anchored to the ground in a way that maybe wasn't there before. Like you're just very present. You're in the moment. You're not in the emotions of what is going on around that inner voice of the gremlin. Like, oh, you could this, oh, that could happen. It's like you just have kind of, I just can't think of anything but a swimmer in the Olympics, they shave their body down before they swim, so there's no drag. So their time is even less. And it just feels like you've shaved off all the kind of minutia that kind of distracted you from being in your wisdom, because you have the wisdom, you have the experience, but you're connected to it now and always processing that, as opposed to hearing maybe some other thoughts or distractions.
Yeah, no, and they're all like, it's the one thing as a trader, to be a good trader, you need complete presence of mind. And the one thing that you have in your first year of trading is a complete lack of presence of mind. Because when you've got money on the line, your heart's beating, you're sweating, your hands are sweating, you're shaking, you've got a million thoughts of panic running through your head. But I can honestly say now, I mean, honestly, I when I won $1,000 the other day, or 1,100, went to bed not bothered. Like, I went to bed almost a bit sad. I felt a bit down for no reason. I think I was down because I wasn't happy by winning $1,100. But then I'll lose $700, $800, and I'm like, fuck it. And I'm not saying this to be verbose or brag in some way of arguing, win this and lose that, and it doesn't matter. It's the fact that over 3 years of trading, I've got so cold to the wins and the losses that I've got complete presence of mind.
See, and I think back to, again, when I got started. I don't, it's tough to remember the time frame. I'm going in my 13th year now that I'm 75 years old.
You must have to make a lot to feel anything, Tim. You must have to make it.
No, I'm going back to the point where I got sick of those losses, to where you're at now. I don't remember. Probably 18 months, I'm guessing, is about what it took me. And now remember, not saying 18 months is better than Stephen's 3 years. Some people do it in a month or whatever. But I remember that. I remember being there, man. I remember being there like, you did it again. You did it again. When are you going to stop doing this? So,
but can I ask Tim?
I think it's going to take people longer too. Just want to say this, Tim, and even you, Stephen. Stephen, you're working another full-time job. I think a lot of the people that are probably doing this initially, they have full-time jobs. They do other things. So their experience of tasting this is probably going to take longer. So bake that into the recipe that, until you see these losses and get sick of them enough, which is going to take longer if you're just doing a little bit on the side. Keep that in mind. You got to have that runway.
And one quick side note before we move on, if you're watching on YouTube, I've had this dream sequence going. Yeah. What? Jeez, oh Pete's, man. What kind of madness was Dumbo? What kind of LSD were those people on? But anyway, I was just kind of casually watching it in the side. That might be the most insane thing I've ever seen. And you took like babies to watch this movie. But anyway.
Stephen, I kind of want to see it now, maybe with the drunkenness. So
Stephen, let's kind of. I think we've talked about the psychology. Let's talk about SES a little bit, and let's kind of head home on this episode here. So
SES set the market on fire. Honestly, I have not seen such a rapid change in the market ever in like 3-4 years, or 3 years that I've been trading. The market was absolutely dead. SES popped up 80%, and kaboom. Now you've got 200, 300, 400% runners every day, and it's scary. It's scary. Like, I'm scared to short.
And if you, if you're, our friend Tim Sykes, I'm sure many of you follow him. You're aware of him. You'll hear him say supernova, supernova, supernova. If you're, SES was a $2 stock, and in 2 trading days, it was a $26 stock, a 1,300% move in, basically a day and a half. The weekend was in between, but in trading time, a day and a half, it went 1,300%. That, my friends, is a supernova.
Yeah, and it's so funny when you get the trash talkers on Twitter. I had this guy who was saying like, "Oh, I'm in from $2.50. I'm a long-term investor." He's like, "I'm holding this up to 50. It's going to 50. That's me target." Like, when it got to 26, I said to him, I was like, "Look, take half at least. Just take it, because you might be a long-term investor. I don't know the fundamentals, but I've seen this pattern a million times before."
Oh, this will be if you're listening to this, I mean, no offense to your buddy there, but I mean, we're recording on October 16th. As much as I love SES, and I mean, I only made $1.25 a share on this stupid thing. But if you're ever considering long-term investing in these low float stocks, check on this stock, put it in your calendar for like March 1st, 2020, and I will bet you a shiny quarter this is a $2 stock again. And if anything, it's probably
quarter.
Well, I don't know how many listeners are out there. I mean, I'm not gonna.
Yeah, you gotta be. I was expecting something bigger, but I think shiny quarters is the way to go.
I don't want to pay out to our 5.6 million listeners $1 a piece. Okay, so, but anyway, Stephen, finish your point. So,
no, but I mean, just in general, SES, it gapped up back on. Is it the 11th of October? We'll have
Yep. Would have been Friday. It gapped up Friday morning, the 11th. Yep.
Yeah, so. and honestly, SES was it was the typical play where it gaps up and fails every day. If you look at the daily, we don't have to go back now, but if you look at the daily, it constantly has these huge wicks, and this is good for Kim because Kim's learning trading. Yeah. You can see, you can probably spot some of the wicks. You can see big gapped up, came straight down, gapped up, came down. Spiked and you had the wick, and if you scroll along a little bit more to present day, you can see the wicks, right? Wick. I can see 4 wicks straight away.
Yeah. So that's what we, into those candlestick charting, people learning it out there. These big wicks and small bodies are, basically called like a doji candle. What I refer to them as that's a one and done chart. That's the type of, when I say one and done, that is a put down for a stock. It's a stock that spikes big, yep, fades, and then you can see, I mean, so again, back to like some of these doji candles, I mean, they spike huge, but they end the day almost unchanged. Hell, some days they go red on the day. And then in the case of SES, you can notice, this is the biggest thing I want newer traders to focus. Big doji candle, red day. Okay. Big doji, then the next day's red. So these are stocks that, back to Stephen's imaginary friend Touche, who's holding this thing to 50, you never want to stay long these stocks because they spike, they drop, and then they fade, which is what SES is doing now. So
no, and 99% of the time they're a short stream. The exception is when these stocks get huge volume. When they get huge volume, all of the shorts get trapped, then the shorts have to cover. When they cover the buy, then longs recognize this, so they go long, and you get fireworks and you get a supernova. But so just to explain though, when I initially took this, I was like, this is up 80%. The volume is like 80,000. I was like, okay, I think I can write this down pre-market comfortably. If it spikes up above, I'll just cut it. If it fades, all the longer term shareholders will just get out. It'll dump, and I'll make money. And I took 1,000 on that pattern, and then but then as when I covered, because I was like, it's down enough. Pre-market, it started rising, it started ramping, it started getting volume. This is when I started thinking, SES is manipulated. It's got something behind it, or it's actually got valid or valuable news. And it was some sort of merger, and there was a lot of shares that needed to be sold, right? If you looked into the SEC at all different prices, there was dilution of shares that needed to be sold. And as it happened, it ramped, and I was short. I took roughly 1,000 short, but I was out fast when it ramped. Do you see that? Do you see the kind of in the afternoon, if you just go right? Yeah. Do you see that point where it just ramped, where it pushed up 280? Yeah. I was out on the first, maybe the second green candle when it pushes with volume. Yeah, right, exactly there. I was out at in the 330s, 340s. I went long. Because I was like, all the shorts are going to get squeezed when that volume came in. I was like, everyone's short. Everyone thinks it's going to fail. When that volume came in, I was like, this could be a terrible squeeze. So
you got a high a day, 10 minutes before the close on a Friday. I mean, if you stay in short this stock, hitting a high on a Friday afternoon, please close this podcast. If you're listening in the car, close the podcast, Google like psychiatric help, and drive to the first one on the map if you stayed short this thing into the close on a Friday. So
yeah, I know, but I mean, I recognized, I was like, this is going to squeeze. So I went long 340, and I was shaking because I can't long. I'm terrified at longing. I was shaking, and I was like, I got from 340 to 375 or something. I was like, $200. I was like, yes. It's like, yes.
Yeah, $200 in what, a minute and a half?
Yeah, in a couple of minutes. But then that's 4, then 5, then 8, then 9, then 10. But yeah, Tim, what you said there, if this thing can ramp from 3 to 6 in the afternoon, what will it do with light trading in the after hours? Because in the after hours, it's significantly less trading. But that means that if there's enough buyers and it's light trading, it can move even faster. And that's why you've got that crazy ramp from 5 to 9 or whatever it is.
9, almost damn near 950. Yeah,
you've got people getting squeezed there without even knowing that they're getting squeezed because they've shut it down. Well, I'd hope they wouldn't shut it down. I hope that's a scary thing to happen. But yeah, and then the next day I was like, I'm not shorting this because it's too scary. I was like, this it's your typical, Tim. This is your typical week open.
Oh yeah, and again, I took right here. You know, it's almost embarrassing. It's embarrassing to admit when you zoom out on the chart. So I bought that high of daybreak at 10.75. I sold it 12. I'm like, woohoo, $1.25 a share, and I was happy, and I'm not complaining. But yeah, you know, so same thing you did on Friday. I sell into that rip $1.25 a share, and then yes, it proceeds to go to 26 the same day. You know, I only sold $14 a share soon. You know, that's not bad. You know, not bad.
But you don't know though. The market's been slow. It's been so slow and so short bias. You're just waiting for SES to fall like all of the others, but it doesn't. And that's the beauty of stocks. And then it changes the entire market. But yeah, I'll try to go long in the first 10 minutes. Like I didn't obviously go the first opening candle because that's mental and reckless.
Exactly.
But I waited for like that's a 5-minute chart. But I was trying to go like long in the 920s.
Okay.
10 minutes in, and it broke 9, and I was out at 9 as well. So yeah, that first bounce I went long on. Is it
right here?
Yeah, that first bounce I went long on, and it failed. So I got straight out. I lost $50. Then I had the bright idea of going short, and again, I covered immediately as soon as it started squeezing. So I was like, oh, here it goes again, and I went long and made it back. So I made no money on this day. I didn't really. I lost a little bit long. But then I lost a bit short, but then I made it all back with a small long.
Well, I tell you what, let's bring this episode home. I got one more question for you because this episode is mainly about you. But one point I would like to make is, I tell you what, you're trading. I mean, and this is a compliment to you. I mean, you're trading the most volatile stock in 6 months. You're going long and you're going short. Excuse me. And your bad day is a break even. Shit. Man, there's a lot of newer traders that would kill, if they attacked this stock multiple times, felt like they were early multiple times, and then they end up scratch or down commissions or down $100. That's again a sign of maturity, I think. So
no, it's just being familiar with price action, but the real golden ticket and the what I saw on the day that I made 1.1 thousand the next day, and it was such a an easy short for me. And when I explain it, you'll see it. On the next day, when you build the case, Tim, you've got it's gap down. It's up a ton, so that's your first short factor. It's due for a pullback. Your second short factor is that it's gap down. So you've got two things there. The third short factor is that you've got is it BIMI?
Yep. That
has stole all the headlines. That's what all the traders looking at. So no one's even looking at SES anymore.
Great point. Then
your fourth short factor is this stock hasn't even got any volume. It's traded 24 million the day before. It's trading 200,000 pre-market before the open. So by an indicator standard, it's going to trade a couple of million, 3, 4, 5 million. It's previously been trading 25, 26 million on the day. So if most traders are long, and no one's watching it anymore, it's going to drop, and then when it starts to drop, all the longs are going to panic. So when you've got 4 bearish indicators and no bullish indicators at all, you can start to think, right, this is a textbook guaranteed short. So I still played it safe. I was still as half size in, 2/3 size in at me maximum because I was still scared because it's a low float. But I rode that down 20, 30, 40%. I was in and out all day, but I rode that down 20, 30, 40%. And there was never a stressful moment. I was never down more than $100 max.
What I want the listener to do is if you know, often on this podcast, I rant and I, you know, to you, the listener, and I probably yelled at Stephen on about 50 of these episodes about shorting these low float stocks. Remember, I am not anti-short selling these stocks. What I am against is shorting them day one. Now, if you don't, I won't go over it again because Stephen did a very good job. Hit that little back 30-second button on your iPhone and listen to what he said about day three, fading volume, gapping down. There's a new low float du jour, okay? That is when you short these. So if you see my Twitter or you hear me ranting, I'm ranting about Friday, okay, when this thing went from 3 to 9. What did it do Monday? 9 to 26. That's why I rant. Now, what Stephen said, that's when you short these things. That's where you don't blow up your account, and that's where the high risk to reward setup is. Well, Stephen, honestly, I got a question for you, and we got to get out of here. So, number one, I'm freaking very, very, very impressed with you. I still, you know, I often say, I've said it on the podcast many times, I love you, but I don't like you. But I am impressed with what you've done. And what do you think? I mean, what do you think's the number one thing? Like, I know it's hard to pick one thing, but before we get out of here, like, what's number one that's allowed you to turn basically 500 into $4,000 twice in a matter of months?
It's dead hard to explain because for me, I do understand what's happened, but I don't. But it's the culmination of a lot of things. It's fixing the psychology with Kim, realizing the awareness and why you're trading, and getting into the good habits of why you should be taking a trade. And then from that, I've got into good habits where I not only take a trade for the right reason. Like before, I was just before I was just trading to. I was in a bad psychological state where I was just trying to make money, or I was trying to prove something. But sometimes you make the wrong decision to prove the wrong thing or the right thing. But once I'd fixed my psychology to be like asking why I was taking a certain trade in every situation, then I got myself into a good mindset. And then when I had the confidence and I'd proven that I could do it, then it was a whole other mission. It was like, I know I can do this. So I was just like, you've got to cut this loss when you know that the loss is here. You've got to take the right size when you know it's going to go long. So it's 50% psychological and it's 50%. I've just seen it so many times that I can be completely present with and emotionless.
Perfect. Kim, did you have any closing comments?
I think it's just all about not taking it personally. You know, it sounds like the biggest key to this is your ability to track what you've seen before is going to be more on point if you're not personalizing it and realizing that this and what happens on the screen has nothing to do with you as a person and everything to do with, you know, you bringing as much neutrality to the equation as possible.
Fair enough. Well, again, would like to thank you for listening to the Steady Trade podcast. You know, a few things for reference. Again, if you're listening along, just to kind of recap, if you do want to follow along, remember our episodes are all on YouTube. So if you want to see the charts we're talking about, one of the easiest ways, you can go to SteadyTrade.com. All the YouTubes are embedded, or you can just go to YouTube, search Steady Trade, find the episodes and see the chart. Or, you know, again, if you're listening to this way after the fact, I think it is a great chart. I would love you to bring up the chart of SES from October 11th, you know, to today or even further, but bring it up starting on October 11th. SES is the ticker. Check it out. You'll see what is amazing about these stocks, why we talk about them over and over and over again, and the potential, long and short. I mean, if you can, if you're aggressive on the front side, there's a ton of money to be made, and if you can be patient and stalk and wait for the hype to fade, there's a ton of money on the short side. And that's what we love about these stocks, is if you have the ability to spot them, which we talk about all the time. StocksToTrade is obviously a great tool. There's a ton of opportunity, long and short. So we'd like to thank everyone for listening, and we'll see you on the next edition of the Steady Trade Podcast.